I want to introduce our guest today, John Thorman. He's a retirement income planner and financial coach. John, how are you today?
Hey, I'm doing awesome. Thanks, Surfer. It's really a great pleasure to be here with you.
It's great to have you here. So John is the owner of Thorman Financial Group, and you can find him on YouTube here at Financial Success Coach.
That's right.
So John, give us just a little bit of background of your experience and help us understand, how you got started and why you're doing this. And then the other question I have for you is, do you have any gold and silver?
Yeah, we have a little bit of silver. We're use silver for savings.
Okay.
So quick, give you the backstory. I got started in the financial services business in the 90s, and I was focused on selling term life insurance and mutual funds and helping people manage and grow their wealth that way. So I was there when the tech bubble burst in 2000, and I was there watching the Twin Towers come down. And that was awful time period. And that's when I learned that people's money, their retirement money in their mutual funds was at risk because the mutual funds didn't move into cash. The mutual funds kept you in the market. And so I saw them lose half of their, retirement account and what we thought were safe mutual fund investments. And I got really disillusioned, and that led to me getting out of the business around 2005. I went on as a business consultant working with small business owners, and then I started a digital marketing agency in 2014. But I got back in the financial business in 2019, and I'm much older and wiser now, and wanted to help people with this retirement crisis and figure out ways that people could retire and enjoy their golden years with their golden nest egg, and find efficient ways to convert that nest egg into cash flow so that they could retire comfortably.
I think it's awesome. So, one of the reasons I wanted to bring you on here is just to kind of help share that information. There's a lot of people I talk to that seem to be stacking a lot of gold and silver. And gold and silver doesn't produce a yield very often. There are a few ways you can do it. We're going to cover some of that on my channel on another video, but it's still not a very high yield that you can get from that. And so to me, I'm just getting to that point in my life now where I've got another 15 years or so of working. And then I'm going to be starting to look to really retire. John, one of the reasons I wanted to bring you on is to kind of help people get another take on how to hold on to their gold and silver. Most of the people that are stacking, they love gold and silver. It's a great way to save. It's a great way for, an SHTF if we have some kind of big, huge disaster that goes on. Maybe we have an EMP and the lights go out for a couple of years, and we're going to figure out a way to do bartering and other stuff like that. Hopefully it doesn't get that bad ever. Hopefully not. But we also have a lot of people that are stacking to beat inflation, or they're stacking because they believe there's, kind of speculation that they believe silver is so undervalued, it's going to explode in value. And so what I wanted to do is bring up the chart you shared with me too around the financial game plan, because I think this is an important thing to kind of understand where we're at in our own game of life. Frankly, I'm almost 50. I'll be 50 next year. I've always kind of thought of retiring around 55 to 60. I don't know if I'm going to be able to do that. I have to look and see how much income do I have coming in. And I also have to see what my life expectancy is to see if that's going to work. My health, even though I've had health issues, my health is still in pretty good shape that, working another 10 years doesn't really seem hard to me. But it's helpful to know what those options are. I know a lot of people that have been able to retire quite young. And I also know a lot of people that have already retired, but they're now kind of at the end of your red zone here, and they're coming back into the workforce again, into their late 60s and early 70s. And so what I wanted to do is have you tell us a bit about these four, quarters that you have in here, and, kind of your strategy and how you help people.
Yeah, thank you. So I wanted to create a framework that people could relate to with their money, with their personal finances. And I love football. And so it was, for me, it was, how can I take and draw from football to create this analogy and this framework for managing our money? And so I broke our money game down into 4 quarters. You can see here, Q1 is asset accumulation. And that's really where everybody focuses. All the media focuses on that. It's offense, 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 and it's, accumulating assets. And that's what Wall Street is focused on. They do a terrible job of Q2, which is asset protection, and they do a terrible job of Q3, which is asset decumulation, where you're spending your money down. And then, of course, the fourth quarter is asset transfer. What's your legacy going to be? What are you going to leave behind? What assets and what amounts do you want to leave behind? So I created this graphic really to help us understand that framework. And, when you're young, when you're 25, you don't have any assets. The goal is to start accumulating. Yeah. And I love Andrew Carnegie's quote. He was once the richest man in the world. And he said, if you want to get rich, put all your eggs in one basket and then watch that basket. And that's right. He said, put all your eggs in one basket. Everybody says, don't ever do that. Well, there's a time to do that. There's a time for everything under the sun. And there's a time during asset accumulation to concentrate. But as you get older, then Q2, we got to start protecting it. So we want to de-risk. We want to de-leverage. We want to have other risk management tools that we can utilize to protect and preserve our wealth and our cash flow streams. Then that nest egg, when you stop working, when your active income stops because you no longer have a job, if you don't have a goose laying golden eggs, you only have your golden nest egg. Now the job is, how do you efficiently convert that nest egg into cash flow so you can live on it? And that's like what we talked about. The challenge with gold and silver is that we can't efficiently convert that to cash flow. You have to sell it, right? And you don't want to sell it. You want to keep that asset. It's wealth. We want to keep it and will it to our children.
Well, because you want to pass it on, right? And
right.
if you've got a golden goose, it might be a little bit different, right? You might be able to hold on to that gold and keep accumulating, but can you keep managing that goose, or you're going to have to get someone to take care of it for you at some point?
That's right. You're going to have to sub that out. You hire people to take care of that goose for you, right? That business, whatever it is you own, that can keep providing that cash flow. But for most people, they've got a lump sum of money. They got this 401k. Now, how do I take a paycheck from that? And that's where we've got to look at what are the most efficient ways to do that, because there's a retirement crisis in this country. People are retiring and they only have, on average, about $200,000 in their 401k plan. You can't retire on that very long.
Not here in California, that's for sure.
No. So that's what really drove me to find solutions to this retirement crisis, to efficiently convert assets into cash flow, and then go through that asset decumulation phase.
I love it. So tell me a little bit about, I think you had a couple other strategies you wanted to share today too.
Oh, right. So while you're playing your money game, we've got to make sure that you are including all three phases of the game. If anybody likes to watch football, then you have three phases of the game you got to play: offense, defense, and special teams. So your offense, that's what everybody's focused on, is the big score, the big touchdown, the big win. Well, offense in your money game is cash flow management, asset management, and then time management. Okay. Those are the three things you got to focus on. When it comes to defense, remember, defense wins championships. So you got to include good defense. The best offense is a great defense. Defense is risk management, debt management, and fitness. You got to be healthy. If you have no health, you got no wealth. Then special teams, the third phase, that's your mindset. That's so powerful, your mindset. But then it's also taxes and legal. When we got to have a complete game plan that incorporates all three phases of the game.
I love it. And then you have this other chart that you shared with me that I thought was pretty darn cool too. They talked about this. So, it's interesting because, everybody in the coin world understands heads and tails. We'll call it, the obverse and the reverse.
Right.
And then, we all know about edges, right? We'll call those, reeded edges for all intents and purposes of this, American Gold Eagle here. And the funny thing is, those were created because people were shaving their coins.
Coin clipping, right?
Coin clipping. If you have the reeds on there, you'd be able to see easily that someone messed with the coin.
Right.
So it was an ingenious, low tech option for that. And then you can kind of see in this one too, if you look very closely here, you can see that there's a little notch out of it, which is also like a new security feature to know that the modern coins have that.
Yeah.
You know, I don't know exactly what it's supposed to do there, except just indicate it. But anyway, tell us about these three different you know, phases of the coin too.
Yeah. So I wanted to be able to communicate this idea because I get so bothered by these ideologues, people that it's like it's my way or you're stupid. You know what I mean? And I just can't. I don't deal well with that because it's not like that. There is a brilliant economist named Thomas Sowell, and I love his quote. He says, "There are no solutions. There are only trade-offs." And that's so true about our life. And so, you know, I don't care what issue it is. You'll find somebody take a conventional approach and say this is the right best thing to do all the time, but then you'll have the tails, the advocate, the contrarian, who'll say no, you need to do it this way all the time. And I'm like, that's silly. Let's ride the edge, because the edge, right? We want money game. We want a mental edge to win our money game. And that's that third spot here. And I love it because from the edge, I can see everything. And then depending on what the environment is, depending on what quarter of my game I'm playing and whether I'm winning my game or if I'm behind in my game, I'll have the ability to exercise wisdom. Applied knowledge is wisdom, and make the best decision for me given my environment and my resources.
I love it. It's interesting because just an analogy here. I've only really been stacking hard for 4 years.
Okay.
Prior to that, I was stacking for 2 years. You know, before that, mostly in receiving. And then when I was a kid, I got silver coins. My dad taught me about it. I have no idea where they went, so I obviously didn't hold on to them forever. They must have been spent. But, you know, I understood that as a kid. I also had like a stamp collection when I was young, and then, you know, big time kind of passed there. What got me back into it was looking at gold as an inflation hedge, and also trying to understand what the value of silver is that I was getting 6 years ago, trying to figure out, okay, is this a good birthday gift or not? And you can go back to my very first 2 videos of my channel, and you can see me, you know, showing the bars that I received and telling that story. But the reason I bring this up is there's a lot of people that are watching this right now that probably bought silver towards the top of it in the 80s. And they've been waiting
$50 an
45
ounce?
years. Yes, around $50 an ounce. They've been waiting 45 years for that. Okay, it did go up in the, I think it was 2011 was when it went up again, and then it went back down. So, you know, there's these different time cycles we get, and so one of the things I just want to point out, and this is one of the reasons I brought John on, is you can have a game of just holding everything and passing it to your kids. Okay, there's nothing wrong with that.
Right.
But if you're buying and accumulating precious metals and you're hoping that you're going to use them for retirement at some point, you're going to need to know the patterns of cycles. Okay, because sometimes gold and silver may seem like a conventional type, you know, buy. Okay, it's usually going to be more of a contrarian one for the most part in the past. But with all the money printing we've done, it's starting to become a little bit more conventional in thinking for some people, okay, that are aware of it. But we're still only half of 1% is what, you know, what we believe to be the percentage of people in the country that hold it. Now, I think that's going to change in the future. But for you that have been holding it forever, there may become a time where we start to see silver really go up. So let's say silver goes back up to 50. It goes to 100, it goes to $200 or $300. Do you sell it? Do you hold on to it? So, you know, these are all things to kind of consider. And someone like John gives another perspective to look at. And so that's why I wanted to bring him on, is to help you guys have another way to look at it.
Yeah. And I love that analogy. You know, the conscientious side, that playing from the edge lets you know, maybe it is time to sell some of this. Maybe not all of my silver, but maybe it's time to sell some and take some profits and put them in another asset class that can generate more cash flow.
Yeah. And you're going to have to look at what you have, how you guys have separated things. And, you know, do you have too much of one particular asset class? But you're going to have to look at the timing of things too.
Right.
Okay. You don't want to sell at the bottom of any market. You definitely don't want to buy at the top, but you can't always help it, and you don't always see it. And to predict a bottom and a top are near impossible to do. So I'm not saying go out and sell your silver right now. That's not what this video is about. What I'm saying is, for those of you that have accumulated for a very long time, there may be some other strategies you can create or invest into that allow you to not sell your gold and silver if you want to pass it. Or there's strategies that when we get to a point where we're starting to feel like gold and silver are starting to hit peak, which I think is going to be somewhere in the next, let's say, 4 to 8 years, then you might want to take some of that off and move it into another strategy that creates more cash flow. So, John, what I wanted to do too is, I wanted to share this other document that we just kind of created real quick on the fly here, just talking about asset allocation.
Right.
There's 13 of these in here. I only have a couple of these myself. I highly doubt there's anybody that has all of these unless they're just very wealthy and they just keep trying to find different things to put it into.
Right.
But you had mentioned Andrew Carnegie talking about, putting all your eggs into one basket. And then you talked about, kind of going the opposite direction as you're looking to retire to spread out that risk. So first off, guys, I'm not saying that you need to have all 13 of these. Okay. These are just different options you can get into, and each person's going to have different interests. Some of these can be kind of like that golden goose, like a business or real estate that continues to produce. And you may need to get someone to manage it for you. Other things in here are going to be things that are managed by asset managers or other companies, which can take that burden away from you and give you other options. So, John, tell me a little bit about, these categories here. Do you have any thoughts on, or anything to share around these?
Yeah. It was important to me that we really understand what our options are. I mean, there's way more assets. And so Wall Street really has dominated this conversation. And since Harry Markowitz in 1952 came out with modern portfolio theory, Wall Street's been telling everybody it's a balance between equities, stocks, bonds, and cash, right? Stocks, bonds, and cash. Everything is stocks, bonds, and cash ad nauseum. And it's like most people aren't aware and aren't incorporating all these wonderful other great asset classes that could make up their portfolio and give them much more security and protection and cash flow. So, I love the ancient wisdom found in Ecclesiastes, chapter 11, verse 2, where it talks about, investing your money into 7 or 8 different things because you don't know what disaster may come upon the land. And to me, that's just speaking, as we entered that retirement red zone, it's the 5 to 10 years before you retire and the 5 to 10 years after you retire. It's a red zone because it's danger. You cannot afford to lose 50 to 70% of your 401k in a stock market crash because you don't have time to make it back.
Well, and it depends on your timing too. I used to have a lot of mutual funds before 2008. And then I didn't have mutual funds after 2008. I don't like them. So personally, I won't put my money in them.
Right.
Now I had a special thing where I actually had someone managing my own mutual fund for several years. That was a little bit of a different situation, but to just go into the regular mutual funds, especially if you have an advisor that puts you into like 5 or 6 of them and they all 5 or 6 own Apple and they own Tesla, things like that. You end up paying a lot of fees for
not much diversification or asset allocation at all. And you see this in 401ks all the time. People have got their 401k, but 100% of it's in equities.
So that's not diversification. So my family got clobbered in 2008, like very clobbered.
Yeah.
And we thought we were diverse. We had a lot of different real estate properties all over the country. We also had a lot of stock in a bank, right? And then we had a lot of stock in the stock market. And we thought, okay, we're diversified. There's not a whole lot that can really hit us here. And most of that got hit very hard. Okay. It didn't all disappear, but it got hit extremely hard, especially the banking stock, and which basically went down to like 0. And then we had, a lot of the real estate properties. Some of them basically had to be turned back to the bank. Others had to be short sold. And then others we just couldn't hold on to long enough to let them recover. And so, I can tell you that if that were to have happened at my retirement point, I would not be retiring. I would basically have to continue to go in. And so I've been playing catch up since 2011. and kind of started my career over and really got into trying to build that up. So the other thing I want to put out there for you guys, if you have interest in learning more about these 13, I'm curious to know what you have interest in. Go ahead and list them down below as in the comments. And then if you haven't hit the subscribe and bell icon yet, go ahead and do that so you don't miss any other videos we do. And then also hit the thumbs up. That kind of wakes up the algorithm and keeps things going well. Last, let me know. What do you guys think? Do you like John's philosophy? Do you like some of the things that he put together here? If you do, I'd love to have him on again. And John, I'm thinking even a live stream would be pretty cool to go and answer people's questions, especially when we get into the categories that you've got your most expertise in.
Yeah, I would love it. That'd be great.
Okay.
It'll open up your mind, a new perspective. You'll see all three sides of the coin.
I think it's awesome. Now, I personally haven't used John's services, but I've been following him on YouTube for a while. We've had a lot of great conversations, and I think he's a person to at least reach out to if you have interest. You may have a financial advisor or planner today. You may want to take some of these things you've heard on this video and take it back to them. But if you guys want to get a hold and reach out to John, I'm going to go ahead and put, let me see if I can make this work. We've got a link here that I'm going to put in, which is kind of a plan you can run through to see how well things are set up for your retirement. Okay. This goes to John. John will reach out to you guys. They've got a promise on this plan as well. I'm not super familiar with it, but says that they won't spam you. I know John has already agreed to not spam anybody, but if you want some help, if you want to look at your situation and work with someone that does this for a living, here's an option for you. So you can start to fill this out. I went through the process with John before we filmed. It's not too complex. It's kind of high level looking at numbers, and it does spit out a few charts for you to see, are you on track, or are you going to be a little bit lower than what you're hoping for? And one of the reasons I'm even doing this in the first place is I've got a couple friends that have retired and have had to come back out of retirement. And I don't think that's what anybody wants. And so I want to be able to help you guys have some other options as we're stacking, so that you can hold on to your gold and silver, you can pass it on to your kids, or if you have a lot of it and you're planning on selling some of it, you can look at when we hit all-time highs again down the road. We're just getting started in the gold bull run, and we haven't even started the silver bull run yet. So when we get up to those tops, which we're not going to know for sure until they're coming down off of them, by the way, guys, I want to give you options to look at and to think about. So, let me know. What do you guys think? John, I want to thank you for coming. Is there anything else you want to leave us with?
I don't think so, other than just explore other options. There's way more options than what most people are really shown. And a lot of that is because of your advisor's licensing. Like the companies that they work for, they're not allowed to talk to you about other options. So there's a lot more out there that you can do, and I'm happy to help guide you in those conversations and that discovery.